We used to put this song on in my office when we needed a rally, to the point where everybody started hating this song. So we put it on today, not like we needed a rally, but in theory, why not put the music on, right? I'll get to it in a second. Hang back, hang back. Alright, let's talk. What's up? Alright, so I stopped making videos because it became redundant. And the last thing you heard from me, maybe on StockTwits or Twitter, that I was selling my portfolio because I wanted to go to cash so I could be more nimble. Some of that worked out, some of it didn't work out. Obviously, selling the Alibaba didn't work out because I had to rebuy the damn Alibaba next day. Because there's no way in hell I'm letting it break 192.50 without getting back involved. So right back into the April 200s. And then we sold the April 200s to buy April 210s. We got the June 210s. And short term, the way we're playing the options, the way we're playing into the earnings is we set up a 200-210 call spread, which we wound up blowing out of because the stock already went to 205. So now we're in the 205, 207.50, 210, 212 iron triple-winged condor. If you'd like to learn more about what the hell I just said, come into the chat room. So if you don't know, my plan and my strategy is obviously we're holding the diamonds and the Qs to the day we die. We had our first test of a 5-day VWAP on the diamonds, which it held. Now, I like making these videos, but sometimes these videos sound so far-fetched, so absurd, that there's no reason for you to believe me. But I'm going to tell you anyway. We were short the diamonds the other day, and we had a level on the diamonds for a pullback. I know this is going to sound nuts, and I don't even remember the price now, so let me go check. It was something that was extraordinary. It's really hard to believe that we covered down there. 260.90. Again, I'm looking at it. I know I did the trade there. Some of the other guys did the trade also. 260.90 is where we covered the diamonds. Now, I wish I could tell you that I covered and went long, but we waited till basically today to start getting aggressive on the diamonds again. And here's the sick thing. As far as what I said about 10 days ago, let me backtrack and tell you the whole story. So what did we have? We had the VRX, we had the US Steel, we had the Twitter, the Snap, the Alibaba, the AMD, the Mark, little HMNY, I had that weed stock, and the SQ, the rig, diamonds and Qs, right? So basically I wanted to just go to cash. So I sold everything indiscriminately at any price. It didn't matter. That was last Tuesday on that intraday reversal, and we'll get to that before I go any further. Once I saw an intraday reversal, I'm thinking, aha, the VIX was going up. Every sign that I needed to say maybe this market's going to have a sell-off that lasts more than 2 hours, because remember, we still haven't had a sell-off that's lasted more than 2 hours, probably since the last day of last year. And then before that, we haven't had a real sell-off since August 18th. And before that, we had the last sell-off was in June. So we've actually had 3 sell-offs that have lasted more than 2 hours, which is insane. These are not exaggerations. These are facts. Usually I use a lot of generalizations and always and nevers and exaggerations just to make my point. We really haven't had a sell-off that's lasted more than a couple of hours, other than June, one in June, one in August, and one on December 30th to end the year, which was ironic. The UVXY has actually rallied 3 days in a row, only to end off down today, but we actually had a 3-day rally. So we've had a blow-off top intraday reversal coupled with the UVXY and the volatility index going up. We've had the shit stocks, the pump and dumps being pumped, being dumped. You know which ones I'm talking about. Anything blockchain or biotech. A lot of these stocks have rolled over and died. Your Kodaks, you know, your GCaps, your HMNYs. Throw Mark in there. Well, your riots, your ex-nets, and all that stuff. So everything you want to see, the dash for trash happened, the January effect happened, you had the volatility index going up, and you had an intraday reversal. The only thing we didn't have was the dry ships rally, which would have been the coup de grace. Because if the dry ships is rallying after we have the dash for trash and the volatility is going up and a blow off top, that'll be your sign. So we were almost there, but we did get the blow off top. But this time, at least, we didn't do something stupid by staying short those stocks. So we did the first thing was sell the portfolio. And then what happened the next day, we had the biggest rally of the year after the blow off top. So what's been happening is we're getting these moments where the market's selling off, and all it's doing is trapping more people short. Therefore, the day that we start to rally, the shorts start to cover, the bulls get encouraged, the money gets divided, I get excited, now you're broke and it's no joke, you better not short this market, just buy it. Freeze! Rock! Freeze! Rock. You know what I'm doing, right? Okay, so then we get a week later and then we have another intraday sell-off with the volatility going up. The stocks are going down, the blue chips and the blah, 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 and the Bitcoin and the blah, and everything's crashing. And yet we still consolidate, hit a spot of support, which for me was 261 area on the diamonds. Next thing you know, we bounce 500 points since Wednesday afternoon. So if you think you've missed this bull market, you haven't missed anything. You do realize that once Alibaba broke 192.50, you're looking at those $200 calls up 1,000%, 10 times your money. You think you missed out on some Twitter, right? Twitter has one good day. A couple of weeks ago, you think you missed it. Next thing you know, it pulls back 3 points. And then today, you're breaking 22.50, nice and innocent. And you're looking at the $23 calls. Bang, you're in the $23 calls, making 200, 300, 500. 700 times your money. Sorry, 700%. 7 times your money, thinking that's a good trade. You get out, next thing you know, it's 9, 10. At one point, I think it was about 40 or 50 times your money. And then if you rolled into the 23.50s, you're talking about 1,000 times your money because those options were trading at a penny. Some of our guys were blowing out of them at 20 cents. That's 200 times your money. Sorry, 20 times your money, 200%. Is whatever I'm doing. You get the idea. These options were a nickel and they went to $1.50. All right, put that in your freaking pipe and smoke it. You bought 100. You bought 100 calls at a nickel, and they went to $1. Basically, you know what that means? $100. Sorry, $500 turned into 10 grand in one day. And that's not even the tip of the iceberg. Oh, that is the tip of the iceberg. Then the rest of the iceberg, if you went out and just said, you know what? I'm going to take some of that Twitter and roll it into some real lotto tickets for the end of the day. The 23.50s were trading at a penny. At one point today, those 23.50s that were trading at a penny were worth 75 cents, I think it was. So $100 worth of those calls was worth 7,500. That's 75 times your money. Did you miss the bull market? You haven't missed shit, people. Come join us. My policy is such. Come enjoy. Come and listen to me talk. My brother 8-Ball, he's a biotech bonanza. He's finding stocks I never even heard of still to this date. We've both been doing this 20 years. Dude's calling out major shit in the chat room. One of our guys who's now has become one of the instructors, Yuri, killing it on the Twitter calls, buying the diamonds and the Qs today because we know Fridays have been phenomenal. You know why Fridays have been phenomenal on the market? Because 95% of the time the market gaps up on Monday, so why not pile in on Friday to play the gap on Monday because it's been working pretty much 90% of the time over the last 5 or 6 years. And then you get the earnings reversals. Like OLED was gapped down. Next thing you know, it's going green. Goldman Sachs. You guys even remember Goldman Sachs getting downgraded and was down at 250? The stock, what did it do? It went right back to 270. That's 20 points. The 255 calls that we had at $1.70, we blew them out at $3. They went to 20. Sick. This is the only industry where you double and triple your money, and at one point you're going to feel stupid, like myself. Do you remember the March 250 calls? Remember the March 250 calls on the diamonds at $1? And we were so happy selling them at 350. Sold some at 4.25, patting ourselves on the back. They're trading at $17 now, kids. So if you would have parlayed those March 250s into the June 260s, you're still up 500% on your money. This is not how the market normally works, but you have to keep doing what's working until it stops working. Yes, one day down the pyramid scam, down the rabbit hole, whatever you want to say, eventually you will get beat. But if you're taking profits from the earlier trades and just rolling them into a further strike, eventually you're going to lose. But if you're using the same size, let's say you put $2,000 into options and you made $5,000. Okay, now you're up $5,000. So you take that 2 and you put it into 2. You buy $2,000 more worth of options and you make another $5,000. So now you're up 10 on that same 2. So now if you take that 2 and roll it into another one and you make another 5, so you're up 15,000 on that same 2, right? So now if you take that 2 and now we're rolling into June 270s, if you can believe it, 270s, because why won't the Dow go to 30,000? At this pace, we'll be at 30,000 by April 15th, which I think is the plan. Let's get the Dow 30,000 by April 10th. We'll sell off for 5 days so everybody can pay taxes. We'll have a 10% correction. Everybody will be like, oh my God, the market's down 3,000 points. And then you'll realize, oh wait, we just rallied from 7,000 to 30,000 without even a pullback. So what that we pulled back? So if we hit 30,000 and we pull back 10%, you know what that means? We're at 27,000. Even if we sell off 10% on Monday, what does that get you? A 2,600 point sell-off, right? Even if it happens on Monday, who cares? Where are we? All we're down is, so 26,000, where are we now? What did we close at? 26,616. Let's do easy math. 10% is a 2,600 point sell-off. So minus 2,600 from 2,600 minus from 26,000, where are we? We're back to 24,200. Who cares? Because what's going to happen then? Exactly. We're going to start buying on our way back to 40,000, 50,000, 60,000, 100,000. Same thing with Alibaba. And I told you this in a prior video. Alibaba has and was sucking. Okay? The stock ran from 90 to 192. The numbers came out, they were phenomenal. And then they had the Chinese day where everybody is forced by the government to buy something on Alibaba. I forgot what they call that day. But there's a day where the Chinese government comes to your house. Hello? Have you bought something on Alibaba today? Well, if you haven't, get in the fucking van. They threaten your life and threaten to take your children away if you don't spend at least $300 on Alibaba that day. And even after that day, the stock didn't do anything. And then what? Why wasn't it doing anything? I wonder why. Maybe because the stock was up from 90 to 190. So it consolidated for 3 months. And it chopped down to 170. Oh, back to 180. Oh, thank God. Oh, back to 167.50. Oh, back to 191. Oh, my God, right back to 180. Oh, 3 months of this chaos of it going nowhere. So after a 3-month consolidation on the king of all stocks, what did you think was going to happen when it broke 195? Was it going to go to 196.20? It's going to tack on 10%. Here we are, 205. So now when the numbers come out, there's 2 ways to look at it. Has the stock already anticipated the monster report they're about to say on February 1st? The stock has just run from 170 to 205. Is the number, are they baked in now? So when they report that amazing quarter, is the stock going to sell off? That's the question. That's the question. So if you don't know anything about the market, generally it's a speculation. You're buying the rumor, selling the news. This is exactly what's happening on the the Alibaba. It's running in anticipation of a monster blowout quarter. If the quarter is just good, it probably will sell off. Does that mean the stock's not going to 250? Of course it's going to 250. Stocks that break 180 go to 200, and when they break 200, they generally go to 250, and then they go to 500, which remains my target. 4-year target on Alibaba is 500. So do I care if it sells off 12 points after they report their numbers and goes back to 190? The only thing we're going to lose on is the money that we are gambling on the earnings report with the call spread for next week. But we're going to have June calls that, yeah, they're going to disintegrate by 20 or 30%, but you still have till June to make a recovery, just like last November when we were buying the Aprils 9 months out so we could withstand that annoying 3 months. And then we bought more April 200s at 4 and 5 and 6 and blew them out at 12. And of course now they're at 16 or 17 or whatever. But then you got Intel coming out with numbers. And then you get Twitter. So anyway, let's go back to the portfolio selling, right? 9 out of 10 times when I sell out of the stock, and again, maybe this is narcissistic, but remember, I'm not really a narcissist. I'm a self-loathing narcissist. I hate how much I sort of love myself, but I really don't even like myself, but I portray this narcissistic, conceited, know-it-all douchebag. I'm not that guy. I'm not that guy. Come listen to what I say on the broadcast. I'm very hard on myself. I'm very disappointed in what I've done because, again, I was in the queues at $50. I should never even make a trade ever again. I was in the market buying stocks when everybody was running away in March of 2009. Diamonds and Qs right there. Qs more than the diamonds. I only got into the diamonds later on because I didn't like the way they traded. But the Qs, we're talking about the Qs. Remember 143 was our target for December? We're at 171 now, people. All right, but anyway, there's no bull market. Let's go back to the portfolio dumping. VRX, right? Here was a stock I was killing it. Killing it. In at 50, 17.50, bought more. 20 breaks, I'm in. We get the downgrade, which is bought, and then we get the rebound. Then next thing you know, another downgrade. You ever notice that the stock keeps getting downgraded every time it's about to break out? That's because they're corrupt scumbags that are downgrading the stock because they're short and they don't want to be short. So they keep downgrading it so then it pulls back so they can cover their short and probably go long. So do I not like VRX anymore? The only reason I don't like it as much as I did 6 months ago is valuation. Stock's up 50%. You can't complain. Okay. Did we sell it all at $24? No, but we sold a bunch of it at $24. And just for the fact that I sold the stock and it hasn't gone above where I sold it, to me, that's a sign. And I know that's where I get, that's narcissistic. That's assuming that the entire stock market revolves around me. But after doing 20 years of this, I believe the entire stock market revolves around me. Oh! So VRX kind of off our list right now. But Twitter, we know Twitter normally sucks. So Twitter, it spikes, it sucks for a couple of weeks, and then every once in a while it has a massive Friday. Bang. So you didn't miss shit. Twitter today made up for all the Twitter trades that you did over the last 18 months for a possible loss. HMNY. Is it a real company? I don't know. MoviePass. Did they make any money? I don't know. I think the stocks are pump and dump and eventually goes to zero. But the other day when it broke 975 and broke over the VWAP and started going green at 975, it was a screaming buy. And we bought it at 975 and we sold it at 10, 10.25, and then it rolls over and dies and goes back to wherever it is, 8.50 today. Is it good? Is it bad? I don't know. But what my point is right here is that most stocks do suck. That's why owning the diamonds and the Qs is the easy way out. Some say it's a cop-out, but why not own the stocks that only go up? Because here you got your VRX, oh, doing great. Next thing you know, down 5 points. Your Twitter, oh, doing great. All of a sudden, down 4 points. It's not even back to where it came from, even after a day like this. And then you got, Alibaba's at new all-time highs. Goldman Sachs, I still like the AMD. But if you're in AMD from last quarter, you're still underwater. So most stocks kind of suck. There's like 40 or 50 stocks that go up all the time. You know, Microsoft's one of them. QQQ, diamonds. QQQ and the diamonds, for me, gives me the package of all the stocks that always go up. Boeing always goes up. Caterpillar's always going up. So the diamonds and the Qs, the diamonds and the Qs. But if you're going to day trade, which will drive you nuts, and the reason that it drives you nuts is because if you look at any stock, and I've come across 12 to 13, possibly 20,000 traders that have come through the doors of the company I used to work for, the company I worked before that, T3, suck my NASDAQ, hit the bid, Affinity, doesn't matter. I know everybody's horror story. I know a guy that lost his life savings on a company called EQIX. EQIX, the stock's trading at $444. You know where he sold it? at about 80, down from 120, taking like a $200,000 hit. He never recovered. You think he's excited to seeing that stock at 444 today? The guy probably doesn't trade anymore. What's up, Justin? I remember that day. You were crying. You were telling me what I think I should do. And the stock was at 120, was breaking 80. I was like, if it breaks 80, it's probably going to 50. And it did go to 50. And it went to 40. So selling it at 80 at the time was a smart thing to do. But next thing you know, it's gone from 80 to 450 over the last 10 years. I know you probably weren't planning on holding it for 10 years, but it's sickening. It's sickening to look at any stock, and that's why day trading, if you're going to day trade, make sure you have one or two specific things that you're trying to do. For me, it's the intraday blow-off top reversals, capitulation low reversals, a 1-minute multi-day VWAP reversal that Zach, the emperor of the VWAP, showed me, and I've brought his strategy and made it into something that complements what I've already been doing for 20 years, but you could still trade it without the VWAP. The VWAP, the 1-minute VWAP, everybody's got access to it. It's a fantastic trend reversal indicator. If your stock is so strong, right, why the hell is it breaking the 1-minute VWAP? Right, exactly. Probably shouldn't be. So that's something you should take notice. So if it breaks the 1-minute VWAP and the trend is reversing, and if the stock actually gives back the entire gap like it did on Caterpillar, you short it. Yesterday, Caterpillar was an amazing short. What did it wind up doing today? Still down 250. And also, if the stock reverses intraday, usually the next day there's some sort of weakness. There's a lot of things to learn. But do what I'm doing, and what I do now is I'm trading anyway. And now I'll talk. Either in this microphone, check, check. Or in the omnipresent microphone that I have in my room. Either way, what my plan is the room is free. Up until a point. I try to instill everything I used to teach in classes into the live chat room. Everything I used to get paid for individual seminars, I do it live in the chat room. And here's the catch. There are no credit cards here. There's no down payments. Come in, make some money, and then join for life, and we never talk about it ever again. That's the way I want to run my business, because it's my business. I'm the sole proprietor of Hit the Bid right now. And I've got some awesome assistants right now, and things are clicking. So come and join us. If you're disappointed in the chat room that you're in, come and join me. You got penny stocks scammed, come and join us. It costs you nothing. And you're going to learn not how to trade penny stocks, not how to just trade one or two ways. You're going to learn everything there is over time that there is to trade. And you're going to learn a core set of values on how to make money every day. And then what I've been telling people is, if you make money during your day trades, take that money, take half that money, and put it into the diamonds and put it into Alibaba. And that's been our strategy. Make a little bit during the day on some day trades. Oh, you made $500 on HMNY yesterday? Why not take $250 of that and go ahead and buy some diamond calls? Oh, you made $300 today? Short Netflix for 2 minutes? Guess what? Take $150 of that and buy yourself some Alibaba. Maybe buy 20 shares or buy some, 210 calls for leaps. That's what we've been doing. Because everything's going. Everything's moving. There are short opportunities. There's long opportunities. But right now, I don't think there's anything better to own than your diamonds, your Qs, and your Alibaba. Okay? So that's what I've been doing. All right? So I invite you. Come into the room. Come hang out with us. Ask questions. And again, I'm very easygoing. I'm not going to ask you for a credit card ever. I'm not going to ask you for money. I want to just show you what I do, what I know works. I want to instill that knowledge into you. And then if you believe me worthy of your hard-earned money, then join up. Because my goal is not even to have to use your hard-earned money. Let me show you how to make some money over a month, and then just give me the money that you made, and then it's like an even split. You're at break even. You made the money, that showed you how to make the money, so now you pay to be a member of the room for life, and now continue to make money, and we never have to talk about money ever again. It works out good for you more than it does for me, because obviously some people just don't get it. And all these education companies and other chat rooms, remember, they charge you up front. They don't care if you succeed. I personally have to have you succeed Because if you don't succeed in that first month, at least on some respect, you're probably not going to stick around for life and you're not going to join. So I have to be there to prove myself to you. So let me prove myself to you. Come and join the room. And one Friday like today, you're a member. Three people signed up today. I want to thank you. It's an easy sell for me when you're blasting into options at 4 cents and banging out of them at 30 cents and 50 cents and $1. A lot easier for a sale if you just took a $300 trade and made $5,000 on it. It's a lot easier. Hey, Mr. Jones, how you like that trade today? And you own Alibaba and the diamonds and the Qs? Fantastic. Here's where to sign up for the Kenny Glick experience. Because that's what it is. It's the Kenny Glick experience. It's like the amusement park of trading. I'll show you options. I'll show you how to trade futures. I'll show you a little bit about a VWAP. I'll show you the reversal strategy I've been using for 20 years. I'll teach you about sentiment. I'll teach you everything I know. All right? Have a good weekend. Hope you sat through this whole video because I had a lot to say. And by the way, this is no longer the UVXY beard. This is the market never goes down beard. So until the market has a 10% correction, I'm not shaving. So either it's a 10% correction or I get divorced. So whichever comes first, hopefully it'll be the 10% correction and hopefully we're a part of that as well. But right now this market is in cruise control and there's really no reason that it should be derailed, especially during earnings season. I think we're going to power our way through earnings season. Then maybe somewhere at the end of March, beginning of May, people are going to need to pay their taxes, so they're going to have to do some selling to pay for their taxes and so forth and so on. And then comes May, and maybe we sit around. But again, if you're thinking 5 or 6 years down the road, I don't see any reason that this market's not going to keep on going until further notice, until we break down into some key levels that I have all plotted out, and I'll show them to you, but you got to show up. All right? Farewell, and if anybody's been asking me about these hats, they're 20 bucks each, and I'm going to do the flex fit, okay, not this hat, so that the lettering will be a little bit lower. I'm going to put Dow 1 billion on the back underneath the Hit the Bid logo. It's a flex fit. They come small and medium and large. 20 bucks a hat. Let me know how many you want, and maybe you'll do a t-shirt combination also. But all right. Have a nice day. Oh, by the way, AMD and Alibaba are next week. And I'll throw this one out there so you can mock me if I'm wrong, because I'm allowed to get one wrong at this point. And to my haters out there, where are you? I had 2 guys pestering me the whole year. One guy said, oh, now he's just going to hold on to the diamonds and the Qs and SVXY. I'll go short all those. So I know you didn't. Because that was when the Dow was at 18,500 and the Qs were around 121 and the SVXY was 40. So there's no way you could have done that trade. But I do miss your lively banter trying to pretend that you're shorting stocks that I'm long. Because good luck with that. So right now I'll give you this one. AMD, the quarters have been decent but not good enough for the stock to pop. I think that changes. I think that changes next week. I think they're going to finally have a report where people say, hey, let's buy some AMD into this report instead of dumping out of it. I could be wrong, and it doesn't matter because we're playing with house money anyway. But if you like AMD, I think you should be hanging on to it. And if we're wrong, where's it going? It's going to dip back down to 10 bucks. You buy more at 10, and then when it gradually goes back to 12 and change, you'll cost average, and you'll break even anyway. So it's a win-win-win-win situation depending on your time frame. Because if you didn't notice, Goldman Sachs came back. American Express came back. IBM came back. And right now, we're in Texas Instruments because if you didn't notice, Texas Instruments got its ass kicked yesterday. And you just have to assume, well, where's it going? It's going to be back to 120 sometime this year. So buying it at 109.50 was almost a no-brainer. Good luck, and I'll see you on Monday. God bless, and all that stuff. Later.